All right, so not a proud video at all, but an important video to do. Just had my biggest loss in, I can't even remember how many years. Let me actually look. This is how big the loss is, because it's not the biggest loss of the year. It's not the biggest loss of 2 years. Like, this is the biggest loss in like 5 years. And the crazy thing is like, I just got away from what I do. And I got away from what I know. And it's such a slippery slope. Like, one bad trade can wipe out so much hard work. I'm literally looking at all my trades. Like, over the past 3 years, today is May 26, 2023. Over the past 3 years, I've made $2.2 million in trading profits. Understand, it's not like a big dent in my overall profits. I've just been so controlled with my losses, so careful. And it's amazing how quickly it all just, fades away. It's actually, I'm looking at my biggest gains from the past 3 years. My biggest gains I've had a few $23,000 wins. This is a $27,000 loss. My previous biggest loss after this $27,000, the last 3 years, my previous biggest loss was $6,000, and that was when I got a little too aggressive holding a civil unrest play on the day of the Capitol riots, and I thought that the civil unrest would keep going. I'm kind of glad that it didn't, but that was when I got too aggressive, and I made an aggressive call, and I lost around $6,000. This is nearly 5 times as big as my biggest loss. I didn't even alert this, FYI. Some people are like, oh God, Tim, this was a terrible alert. I made so many mistakes on this trade. Let me just go back even longer, because I'm curious when I had a big loss. It's definitely the biggest loss in 3 years. Let's see, 5 years. Yep. What?
I'm just saying, together for 5+. And
Pascal's been filming me for 5 years. He's never seen a big loss. I'm going back all the way to 2016, my biggest loss in 7 years. Let's see, let's go back a decade, 2013. Come on, there's got to be some other big loss. Back in 2014, I lost $15,000, so nearly double my biggest loss from 2014. Let's go back to 2012. This is the cool thing about having all your trades. I had a $22,000 loss back in 2014, a $16,000 loss back in 2012. So this is my biggest loss in a decade. Just think about that. Back in 2011, I lost $26,000 on PEIX. I remember that one. I was trading with a fever. 12 years since a loss this size. I mean, going back, I started teaching in 2007. Let's see. I think this is my biggest loss. Yeah, this is my biggest loss as a teacher. Let's see. I keep going back. I'm going to look through all my trades. I'm going to see when my last big loss was. I think it might have been like 2004. Oh, my old ones, I just show the audits. You can't see individual trades. I definitely had a big loss in 2004 with the Asian tsunamis. So I think this is my biggest loss in 2 decades. Just think about that. Trading almost every single day. Since 2004, I've made roughly $6 million. That's pretty insane. I knew that it was a big loss. I knew that it was like my biggest loss in years. I didn't know that it was my biggest loss in 2 decades. Just to set the tone, just so you understand. I got to close my laptop. What did I do wrong? So many things. By the way, I'm still green on the year. Some people are like freaking out, like, are you okay? I'm still green on the year. I just am so careful about big positions and cutting losses quickly. I've been really good. And today, everything just went wrong. I'm only up like $8,000 on the year right now. So I just wiped away like 2/3 of my year. We're about 1/3 of the year through the year. Leave a comment below if you understand at any time during this video, it's a slippery slope. And I just fell down this slope. It's crazy to me. And I got to make this video. We have other videos to film. I have other stuff, but I need to like talk about this. Some people are like, Tim, you didn't even alert the trade. You didn't have to tell anybody. I do. For me, I like showing all of my trades. I like being transparent in this shady industry. I obviously don't like this trade. I don't like this loss. Where do I begin? Because it wasn't just one mistake. It was mistake, compounded on mistake after mistake. So lately I've been doing a lot of dip buying. I've been testing out pre-market strategies. Normally I don't trade pre-market. I traded this pre-market. So I'm already going against like the rules that I teach you. It's okay to be speculative. It's okay to try new strategies, but do it with very, very small size and do it very conscientiously of being aware that this is a speculative strategy. You don't go big on a speculative strategy. You don't get aggressive on a speculative strategy, especially pre-market or after hours where the stocks can move so quickly and you can't necessarily get out. For me, by the way, this could have been a lot worse. I could have been down like $60,000, $70,000. That's how big I went. That's how wrong I was. The one good thing I did was cut losses. I know it sounds crazy to have my biggest loss in 2 decades and still cut losses quickly, but I did. Where does it start? Okay, I use stocks to trade breaking news every single day. I would not trade without stocks to trade breaking news. You can click a link below. Some people will be like, stop talking about stocks to trade breaking news. You just had your biggest loss. I don't care. I'll talk about stocks to trade breaking news to my dying day. This is a tool that you need. And I had it open, but I was not aware of the news. And this is on me. Like if you have, let's say, brakes on a car, but you're going through a big turn and you don't use the brakes, it's not the car's fault if you crash. It's your fault. I didn't use stocks to trade breaking news like I should have. I had it open. I just did not pay attention as closely as I should have. So I was buying the stock EFTR pre-market, dip buying it. It was already spiking. They had some positive news. There's a choppy biotech. It was really spiking. It was up 100% plus. Lately, we've been seeing in the past few weeks, a lot of these 50 to 100% runners pre-market go up 150, 200% right around the market open. So I'm thinking, okay, this is going to be one of these big spikers. Let me try to be a little speculative, dip buying it off the highs pre-market. Wanted to take a small position. I thought that I put in 8,000 shares. And the stock was trading at around $1. So I thought I was going to use around $8,000, $9,000. I have an old laptop and I also am a klutz. Not a good combination. Every now and then my O and my 0 get stuck, these keys. I should be using a new laptop. I have a new laptop here. I should be using it. That's mistake number 1. I thought that I was buying 8,000 shares. I bought 80,000 shares. Huge mistake. I have a big account. I just don't trade with it. I trade with a small account in order to teach. Fat finger mistakes happen. This was stupid. I recognized that I had a big position. I'm like, oh no. But it kept dropping. And again, I'm thinking that this is one of these 150, 200% runners in the next 10 or 20 minutes. So as bad as the fat finger mistake is, I'm thinking, well, maybe, it can do better. I start like typing out my alert when I realize that I'm in this stock. But then it just keeps dropping more and more. And I'm like, wait a minute, what's going on here? And I just think that there's the positive biotech news. I don't realize anything else is happening. I should be looking at stocks to trade breaking news instead of typing the stupid alert. This is part of the reason why I trade with a small account. You should not be typing when you're in a trade. You should not be doing something else. But this is my job as a trader and a teacher. So for me, this is why I trade so safely, trade so small. Some people are like, Tim, you're a multimillionaire, trade more aggressively. No, I'm doing too many things. So I fat fingered my mistake, but I immediately started typing out the alert because I try to alert every trade. But as I'm typing it, I'm looking over because I want to make sure I have like 80,000 shares. I'm like, oh my God, I'm an idiot. And I see this thing just dropping. And because I have 10 times the position size, and because rule number 1 for me is cut losses quickly, I'm already down like 10 grand, like that. And I'm like, oh my God, what am I doing? I stopped typing the alert because I'm like, okay, I need to focus on this trade. I don't realize, if I could go back in time, I would check stocks to trade breaking news. Stocks to trade breaking news had alerted that there was an offering. I did not check stocks to trade breaking news. I think that it's just dipping, and I'm like, okay, this is a choppy stock, but it moves up and moves down very quickly. Let me try to dig myself out of it. Big mistake. So I'm fat fingering in too much, 10 times. I'm not checking stocks to trade breaking news. It didn't even occur to me that there was an offering. Very rarely am I ever in a stock that does an offering. It can happen. These companies need money, but they just announced positive news. Even if a company announces positive news, they usually don't do an offering until like the afternoon or after hours. They announce positive news and did the offering like within a few minutes. Like it's sad. It should be illegal. It's a scumbag move. Anyways, I'm in this big stock, big position. I'm not checking stocks to trade breaking news. I try to dig myself out of it, so I double up. I take like a 160,000 share position, and I'm thinking, okay, at least, it's dropping fast, but it should bounce pretty quickly, and then I'll get out like break even. And it just keeps dropping. And instead of being down, 10 grand like I was, all of a sudden it keeps dropping more, and I've added to my position. Now I'm down like 15, 17 grand. And I'm thinking, oh my God, what am I doing? Then I still am not aware of the offering, because this is all within like a minute or two. It's taking a while for me to explain it, but like stuff's moving fast pre-market. This is why I don't like trading pre-market, and now you see why. I'm down 15, 17 grand. I'm like, forget this. I'm not gonna, type out an alert. I'm not gonna try to dig myself out. I'm just trying to cut losses. And I do. Within a few minutes, I'm completely out. I didn't even know what my loss was. I was buying it at first around 110, 115. I was selling it as it was dropping around 95 cents, 93, 92, 90 cents. It's dropping pretty quickly. And I'm just like, I need to get out. Total, I guess I had like 180,000 shares. So it was like roughly a $200,000 position. Totally not supposed to be. It was supposed to be an $8,000, $9,000 position. So taking too big of a position, trying to dig myself out, not seeing the news. The one good thing I did was cut losses, because I stopped thinking about the alert. I stopped thinking about trying to dig out. You just got to cut sometimes. And because of that rule, I only lost 27,000. It was still a terrible trade, but I was selling it in the 90s and I lost like 13, 14, 15%. With an offering, sometimes you're going to lose 50%. Like offerings crush stocks. I actually just have to look at the stock right now because I don't even know what it's trading at. This is later in the trading day. This ticker is EFTR. We'll post. Whoa, it's down to 59 cents. So I got out around 90 cents and I had, like 92 cents. Let me see what my exit was. I want to be very clear on this video because I did a lot of things wrong, but again, this should just help you understand how protective I've been for 2 decades, not to have a $20,000 plus loss, all while making, millions of dollars trading. $2 million plus in the last 3 years and like $5 million in trading profits without having a $20,000 plus loss. Like I've been so strict. So my entry average, again, I'm like adding and then I was exiting. My average entry was $1.10. My average exit was 95 cents. I lost 13%. And I posted the screenshot. We'll include the screenshot just from my E-Trade. Absolutely terrible trade. But I got out at 95 cents right now. EFTR. I'm filming this a few hours later in the afternoon. It's 59 cents. This intraday. Like my exit at 95 and now it's 59. If you're, dyslexic, I guess it would be the same price, but 0.95 minus 0.59 is dropped 36 cents a share since I sold. And I had 189,000 shares, roughly. So I'd be down another 68,000. So 68 plus 27. Right now, if I was just holding, if I was in denial, I'd be down $95,000 on this trade. So I'm glad that I cut losses. I still followed rule number 1. But I fat fingered. I traded with a huge account. if you ever fat finger a trade, you should theoretically just try to get out immediately. Don't try to dig yourself out. It was like a whole series of unfortunate events. It's like lemony snickets in a series of unfortunate events. Taking too big of a trade, not looking at stocks to trade breaking news, trying to dig myself out. 3 mistakes in a row, and it all compounded. Each of those mistakes, you could say it's worth like, $9,000 each per mistake, $27,000 losses. But again, I would have $95,000 in losses right now. That's how dumb I was. That's how wrong I was. And this is how slippery of a slope it is. Again, leave a comment below if I'm making my point clear. Say, it's a slippery slope. All it takes is one bad trade to wipe out days, weeks, months, or even years of hard work. I'm fortunate that, it basically only wiped out a few weeks of work for me. Still green on the year, but only by a few $1,000s. It like basically just wiped away like 3/4 of my year. And I was in the trade for like 4 or 5 minutes, or maybe 6 minutes. I don't know. It was like just a few minutes. I immediately alerted after I recognized what was happening. I was like, I just screwed up big time, just got wrecked, and I was dealing with it. No one even knew what ticker I was in. No one knew. I didn't even talk about it. I was in the trade. I was going to type it out, and then I had to deal with the trade. And, I don't care about like trying to alert when I'm trying to salvage a situation that I should never have been in the first place. So I also really want to be detailed with this video. So I'm actually going to do a little screen recording that we're going to insert right now. All right, so I wanted to go over this specific chart on EFTR just so you can see exactly what happened. I want to leave no stone unturned with this trade. I want you to learn how to avoid losing $27,000 on any trade, trading too big, trading too aggressively, and crazy enough, like protecting myself from a loss that could have been 3 times the size of this. It's crazy to me that I just had my biggest loss in 20 plus years, and it could have been it could have been so much worse. I was so wrong on this stock. Anyways, this was the morning spike. It was spiking on positive news here at around 8:38 in the morning. The news, let me just pull this up so that you can understand why it was spiking. Is my internet not working? Shares were up, so there's an article now. It's like shares were up 17% after favorable drug trial data and an upgrade. So they reported interim data, phase 2 expansion, evaluating combined with some crazy words I can't pronounce, but it's basically to, help women with breast cancer. Really good news, pre-market. And, it was, I don't know how to say this. I mean, it looked very good, right? Like anytime you have this potential cure for cancer, any kind of cancer, but especially breast cancer where there's like a lot of victims. This is really, really good news, and it should have done very well. So the news came out right here. Let me see, where was it? It actually spiked up big here after hours yesterday, previous day, from 54 cents up to $1.20, came back down to like 90 cents, 80 cents. So I thought, okay, like this was a clear, influential piece of news, an important piece of news that it should keep going. And it did. I was watching it pre-market. It went all the way up. It broke the previous high here at 120 and it went up to like 127. So I'm thinking, wow, this is one of these pre-market spikers. It broke the previous high, so technically it's a breakout. This is the problem though, okay? Forget about the offering for a second. Penny stock breakouts, they need to be convincing. Like if it just breaks out by like 5 cents or 7 cents a share, it's really not that convincing here. I'm sorry, my eyes are burning. I probably shouldn't have touched them. I just had like spicy food and now it's in my eyes. It's just not my day. But this was a breakout technically, but not a very convincing breakout. And then sure enough, like right here at 9 a.m., this is when they announced the offering. and it was straight down. So for me, it was bad luck, bad timing for me just to buy a pre-market spiker, like literally like a minute before the offering. I was just trying to buy one of these speculative spikers, and I thought that because it broke the 120 level, I'm getting it on a dip here at like 115-ish, and I think it's going to go back to the 120s. Obviously, that plan failed. You could see this big volume spike in this 1 minute. This is when I was buying, accidentally, 80,000 shares. And I could not have been more wrong. It immediately dropped like 10, 15 cents a share. And that's when I realized, I'm like, oh, damn, I'm down, $10,000. It was all within a few seconds. And that was when, in my stupidity, I doubled up to 160, then 180,000 shares. Because again, I thought that this support, like at 95 cents a dollar, would hold, and I thought that I could average down and then sell into the bounce. Unaware that Stocks to Trade Breaking News had alerted the offering. They did alert the offering news. It's not like the news wasn't there for me. I just didn't check because this was all happening so quickly. And this is the problem with trading pre-market. This is the problem trading with size. You really have to know what's going on. You cannot be unprepared. And this was the biggest percent winner pre-market, and then it was the biggest dropper. So it's a series of unfortunate events, but you can really protect yourself and prevent this from happening by not trading big, especially on a speculative stock, especially pre-market or after hours. Like, I don't care, even if it's your go-to gimme pattern, pre-market and after hours, there should be like warning lights and flashing sirens. Can we insert flashing sirens? If you're going to trade after hours or pre-market, it's extra risky because you don't have the liquidity and you have extra volatility, a lot of movement. I see why I lost so big, right? Like I could not have picked a worse time to enter. I could not have picked a worse time to bet big. I could not have picked a worse time to try to dig myself out by doubling up. 3 big mistakes and not checking, Stocks to Trade Breaking News. Really like 4 or 5 big mistakes all within a few minutes. And the one thing I did right was cut losses. Because as you can see here, it immediately dropped like to the 90s, to the 80s, to the 70s. Imagine if I had gotten really stubborn and I was like, I'm going to double up, triple up, quadruple up, quintuple up. I know traders who do that because they try to dig themselves out, and sometimes it works. With an offering, you just got to cut it. I don't care whether you have 8,000 shares, 80,000 shares, 180,000 shares, or even 8 shares. When there's an offering, you must cut your losses because, as you can see here, this is like the number one ruiner of any stock spike. When the company specifically uses its stock spike to raise money. It's very, very unethical. It should be illegal, but again, they're putting all their little disclaimers. But this is how a stock with good news drops 50% inside of, what was this? The high was here at 854, and then it drops 50% by 946. Inside of an hour, it drops 50%. So no matter what dollar amount you have in the stock, if a stock is dropping 50%, you're going to get wrecked. And this is also why some of you are just starting. And I say, when you're starting, trade small, expect the worst, protect, protect, protect. These are the kinds of trades that are account killers. I, just had my biggest loss in 20 plus years, but I still protected my overall account. I'm not, ruining it sucks. Like, it just ruined most of my year, but it's not like I'm blowing up. It's not like I'm losing all my account. It's not like I'm out of the game. But this is the kind of stock that can take you out of the game. I always rip on short sellers and the crazy risks that they take because they can lose more than they put in. With this one, at worst, you buy it at the top and you sell it right now, you're down 50%. But still, it could not get any worse. A 50% drop on a play, like in one day, that's like near worst case scenario. And still, it's better than, what short sellers risk, where you can lose 100%. You can lose 200%. You can lose double, triple, quadruple what you put in. So this is my nightmare. coming true. I really got to go back to the drawing board, focus on gimme setups, trade small, not try to make it back. Like this is a common thing too. When you have a big loss, you want to try to make it back all at once. It's just natural. Like it's like psychological. I'm not going to try to do that. I've already made some trades since, some stupid trades. I'm on like full tilt right now. And, you know, it's a long holiday weekend that we're going into. I got to really, you know, just think about everything and recalibrate because this should not be happening. But this is what happens. It can happen to a veteran trader. It can happen to a beginner trader. So I hope you learn from it. How do I feel right now? It sucks. And I'm trying to trade more. We have all this stuff to film today. I'm in Austin. Can they see the sign?
Yes.
We're filming with this cool new sign. I have so much to do. Should not have been in this trade. And now I'm taking other trades and I'm losing more by being undisciplined. That's why I have to just shut this laptop down. It's such a slippery slope. Stupid trading. Undisciplined trading. I'm trading like a newbie. And maybe some of you like trade like this. Maybe you're like, wow, like, you know, you make mistakes too. We all are human. Most of us, I think. Mistakes happen. And I feel better just talking about it on video. You should talk about your losses publicly. You don't have to necessarily make a video, but like show it publicly. Be held accountable. Everyone's like complimenting me. I'm not even getting like anybody like being like, you know, ripping on me. They're like, congratulations on being so transparent. I'm like, thanks. It shouldn't be a compliment in order to just show your losses. But sadly, that's like the state of this shady industry. I'm going to go do burpees. I'm going to try to do some burpees. I usually assign burpees when people screw up. I have to do, you know, 270 burpees. It's like, you know, I don't know. When people say they lose like $2,000, I'm like, do 200 burpees. I'm not going to do 2,700 burpees. I don't even think I can do 27 burpees, to tell you the truth. You can leave that comment too below this video. Say, do your burpees, Tim. Stupid, stupid trade. So unnecessary. That's the thing. Like, if I'm going to lose, and I'm going to go big on a trade, like I should go big on like a gimme pattern. And sometimes I'm just going to be wrong. This isn't an exact science, but this was not a gimme pattern. I should not have been in this trade big. Again, I don't mind taking speculative trades. Like, we're traders. You should try different strategies. I have recognized that there are pre-market spikers. Each of the past few days, like I've been close to getting some of these pre-market spikers. And I've taken some, like I was up like, you know, $1,000 on the week, nothing huge, but pre-market spikers and short squeeze stocks are very inexact. I'm not great at it. In a perfect world, what could I have done better? Let's say I didn't fat finger mistake it. Let's say I bought the 8,000 shares at, you know, $1.15. It was off the highs. Hold up. Let me just see what the high was on the day. I know I shouldn't be looking at this stuff. I know. Everyone's messaging me. Congratulations on being transparent. The high, before I bought, the high was at 126, 127. So I'm buying it on like a 10, 15% drop pre-market. And again, I don't mind that. 8,000 shares in like the 115, 110 area. You know, really not the end of the world. When it starts cracking, it also had some support here at like 105. So it was spiking pre-market. It kind of did like a stutter step at 105, then it went to 125. If you are dip buying a pre-market spiker or dip buying any speculative spiker, you need to have a support level. 105 should have been my support. So at worst, I should have been in at 115, out at 105, lost $800. Not a good trade, but acceptable risk. Instead, I went much bigger once and then twice. You know, trying to dig myself out of a fat finger mistake, like I should know better. You know, taking such a huge position, a $200,000 position roughly on a speculative pre-market spiker, like not the brightest. And the only thing I did right, the only thing I did well was cut losses. It could have been so much worse. It already is bad. So I have to, you know, not trade for a little bit. I have to really think about this, but I feel better just talking about it. You don't have to compliment me on my transparency. I'm not like fishing for compliments. It's really sad that, people are so not used to seeing any big traders or well-known traders take losses. Everyone does. They just don't talk about it publicly. It's pathetic. This is why 90% of traders lose. Anyways, leave a comment below. Say, I understand it's a slippery slope, or Tim, do your burpees, or leave 2 comments. I'll post this for everyone to see. I'm not going to hide it. I'm proud to show it off. Like I said, could have been worse. So that's today's lesson. I suck.